Okay, so I hope everyone got the Mortgage Professor link. It's a good way to break down payments by biweekly. I guess typical loans are monthly payments, and doing a biweekly payment or recommending to your client that you have a biweekly option, which could be called a rapid loan program, is a good way for them to save interest over the course of the loan. So it's just an additional tool you can use to offer savings for all the clients that we work with. So it's really extremely beneficial to clients that have a bi-weekly pay period. So if they get paid bi-weekly, they can be shaving off mortgage interest payments as they go, and it'll effectively cut off the overall course of the loan. It'll shorten it, and it'll also lower the interest paid over the course of the loan as well. So, and a typical example would be a $500 monthly payment on a regular loan would be 12 payments over the course of a year. On a biweekly loan program, they'd be paying $250 every 14 days, and it would equal 26 payments. So you're pretty much essentially having 2 more extra payments over the course of a loan.
Two total payments or 1 total monthly payment?
1 total monthly payment, but 2 14-day period payments. But so you're really paying an extra $500 over the course of every month, which also lowers your loan. Your interest paid at a quicker rate, and but it's also really just beneficial for people. A lot of people get paid biweekly, and when you're getting paid, when you're actually putting a payment on your mortgage 14 days early, you're cutting a lot of that interest payment off, and you're hitting your principal a little faster. So.
Okay. I guess some of the other benefits too is that if they can obviously pay off their mortgage faster, they can free up money to allocate towards a retirement or maybe a second home. Because now
you can always. There's so many benefits to it, really. Paying off your mortgage. There's going to have to be examples here that we're going to use.
Okay.
How do I get to the next slide?
You push it to the right.
Yeah.
Nothing.
There we go. So this is just this is a site you can go to. It's the Mortgage Professor website, and pretty much gives you pretty much a breakdown of what you can enter in for a loan. So just typical loan information would be $100,000 loan, interest rate of 4.5%, typical 30-year loan. This is just the default is 26 payments per year. So you can also enter in extra payments here. So say they want to add $50 on top of that every other payment. So you can do every other biweekly of $50. That'll also greatly decrease their interest over the course of the loan as well. So we'll break that down as well. So using this page, you can generate actual savings for your client by obtaining the biweekly payoff program and extra payments as well. So, and you can give them tell them exactly what they'll save over the course of the loan by using this. So biweekly, like I said, 26 payments per year. The benefits of biweekly would be 2 additional payments each year. First biweekly payment per month hits 14 days early, lowering the interest payments. And yeah. And here's what the next page would be. So we generate this information for you. So the first example would be, let's see, so this is just your monthly payment. A typical loan right there. You would pay $82,000 in interest over the course of 30 years.
Okay.
If you divide it by biweekly, and you're just making the 26 payments instead of the 12 monthly payments, you're shortening your loan term by almost, what is that? Let's see, 53 months. So it goes from 360 months to 307, roughly. So that's 4.5 years of shortening your loan term, and you're saving $14,000 in interest.
Wow.
Now, if you just add the $50 payment every other biweekly payment, so once a month, $50, you're saving $44,000 in interest over the course of that loan.
So you basically cut the term in half.
You're cutting the term in half, and you're going from you're cutting the term in half.
Exactly. How many of you guys send this to your customers? Anybody know about this? Ever sent it?
Just found out about it.
But and when you think about it, like most people get paid bi-weekly, and it would make it easier for them to make their payments. And once they get a paycheck, okay, I'll make a half of my mortgage payment. By doing that, they're saving themselves $14,000 over the course of that loan. So it's just a good way to offer them another savings opportunity when you're packaging a loan to them. So I think it's a good program to
Oh, it's
use.
very valuable. I mean,
And,
this is how you convert leads is by selling benefits.
Add value.
Yeah, so if
This
someone
is
else
added value.
if someone else has a loan to them and they're not offering this program, this is an added benefit, and it makes really makes it look a lot more valuable, and it's saving them a lot of money as well. So it's a good opportunity.
I mean, every loan that I package up, this always went out, and I say, see that 44 grand, that's your retirement right there.
And you could say this. I mean, you could say this is just offering the $50 every month. If you just put an extra $50 towards the principal, you'll save yourself almost $45,000. So, and if you're doing the typical and this is just dividing the payment. So this is the same payment as this, and you're saving $14,000. So it's just dividing the two.
Yeah, so this is, it's basically, in order to have a high conversion, you have to, obviously treat your customer like a movie star. Second part is you have to add value. Whoever has the most value and gives the best service. Price is irrelevant at that point. Everybody that's successful in business, that they know that you take a look at, we talked about this a couple weeks ago. Why do people spend, $3,000 for a purse? Why do people go to the Encore when they go to Vegas? Right? Because they get the best service and they have the best value. They feel like they're treated like royalty. That's the only hotel I go to when I go to Vegas is Encore. There's a reason for it. I like the way I'm treated, and Steve Wynn does a very good job. So
You just like Steve Wynn.
I love Steve Wynn, but he makes you feel like you're the best. And so, and the service is phenomenal, and they add value everywhere you go. I mean, and so everywhere in the hotel, and casino. So, and actually, a lot of things that I do in my business, in this business, is stuff that I've learned from him. But this is anything that you can do to have a advantage over your competition. It's going to go in their mind. Oh, I remember Mark told me about the Rapid Pay, the Home Equity Accelerator program. I'm going to go with them. I remember he said I could save all this money. You don't think that's going to go in their mind when they're talking, And so it's all these little tiny things that come up. And so this is huge. No, I promise you that your competition is not presenting this to them. So
What part of the process, so we don't enter it too early into the process and give them information that, just can bog them down? What part of the process are we giving this to them?
I would mention the home equity, the Rapid Pay plan at the beginning.
Okay.
Just to mention it, what it does, and then once they get going to contract, send this to them.
Gotcha.
Because you're right, you don't want to spend 20 minutes probably on this right now.
Okay.
But or you could, then on a refinance, I would always send it with a quote. And so, but on a purchase, I would definitely discuss it with them. And it only takes like a minute to plug this stuff in and send it as a PDF. So it's not that big of a deal. But some people like to see numbers, and when you see that big savings right there, that can turn on a lot of people.
You create a need for it. You create a need for it.
No, it really is. I really could see. It's a waste of money, man, to pay all that money in interest on a mortgage.
But how would they arrange for this payment plan? Is that something the bank's offering?
Yeah, you just set up with the servicing department, and basically they would just auto draft it. There are guidelines of when it is auto drafted. It's not really based on their payroll period. It's going to be based on usually it's a 26 pay plan. And so it's not going to be customized for each borrower's pay period. It's going to be probably like a predetermined, like the 8th and the 23rd, or the 1st and the 15th, or
Is it based off closing date or something, or was it?
no, based off the first payment due.
Okay.
And they normally have to. There may be a shortage because they normally defer their first month of payment. They may have to fund that at the beginning, depending on when their first payments due. There may be some type of shortage, and that they may have to fund that to make it. Because what happens is if they skip their first month's payment, and then it starts, there's not anything to pull from. And so they may want them to put some money into the account. And so, sometimes some loans actually have up to 2 months. They still doing that, 2 months, no payments sometimes?
Yeah, it's possible.
Okay. So it just depends on, usually it's usually 30 days or that following month of the first payment's due. And so, and if that's the case, they're gonna probably have to put some money into the account up front. Usually make their first payment, and that kind of initiates the process to start it. And so the other thing is they can cancel at any time. It's not like they're locked into it. But it doesn't revolve around there. Some people, their biweekly is different. You might talk to some borrowers, it could be like on some people say, well, I get paid on the 8th and the 23rd, but I don't get my check until the 10th or the 25th. Can you take it out on the 27th? So I have 2 days. They can't do that. It's got to be on these predetermined dates, and then that's all they have. And so, but yeah, it's done with our service department. And since we, keep in mind that, 2016, that the goal is that we're going to be servicing 80% or more of our loans. So it makes it very handy if we're also the servicer too, and we can, arrange their payments. So it's just a very good selling point that, I think you guys need to be offering to people, when you're talking to them. But you're right, Sean, you don't want to get too deep into this in the beginning, and then the person doesn't even qualify for the loan. And so, so I would definitely mention it up front as something that's available. And then some people are not interested in it, or they say, hey, look, you don't have to do this now, you can do it later. But just so you're aware of your options. So.
Yeah, it's a really good way to educate them on ways they can save over the course of the loan. And even if you want to break it down, send them a PDF, you can send them that first page, and you can also send them an amortization table of what their costs would be throughout, say, the first year of each of the 26 payments. So you can see how it you have a $100 payment every other payment. So you're pretty much this is set up to where if you're doing extra payment, you're doing $100 every month. And then you have your principal payment of $253, and it shows what the interest is. So pretty much here you see that in the beginning of the loan, you're paying more towards interest, but this extra payment will go straight to the principal. So that's why you're saving at $45,000, and cutting it down. So you can let them know that there's different ways to save. For the bi-weekly payment, this is a breakdown of it for them.
Okay, they can just email that as a PDF, right?
Yeah.
Okay. Yeah, that's really good, man. I like that. That's a lot more thorough than what I used to use.
There was back in the day, there was actually a company that would sell the concept of biweekly payments as a service to consumers, and you have to get enrolled with them and pay them a fee to do it for you. And anyway, it's just funny because it's something people can do on their own.
Yeah, it's really simple.
Yeah, but no, it's good stuff.
It's good.
It is a good sales point. Good benefit.
Is there anything else?
That's it. Yeah, that's the last slide.
Okay. All right,
How
good.
would you want to, like in the scenario here that John's talking about, how would you present that in the first call?
Well, so when you're talking to the borrower and let's say that you're about to get them pre-approved and you're discussing, like in the script and the sales pitch, I always try to, in the first few minutes, mention all the benefits that we offer. And I say, look, we also have a rapid pay plan where you can shave 7 years off your mortgage, and you can lower your interest rate effectively by 0.5%. If that's something that you're interested in, we can talk about it. It's just a bi-weekly plan. Works really well. And they're like, oh yeah, it's awesome. I didn't even know you could do that. I get paid bi-weekly. And you're trying to score points with the borrower. That's why I was telling David on Saturday, don't tell the borrower no, because it's an emotional bank account with the borrower in the beginning. Okay, and if you're telling the borrower no, then that's like 6 strikes versus how many positives. So you have to be very, very careful. And so what you're telling to the customer, you want to have more positives in the bank account than negatives, because if you run to a deficit, they're not going to probably stay with you.
Right.
So you want to make the offer. The idea is to have an irresistible offer in 5 minutes to the customer. You need to have an irresistible offer. If you don't have an irresistible offer, then you're not going to be successful. So that's how Domino's became famous. I'll get you a pizza in 30 minutes or it's free. That was their slogan to success. And so you have to have something that's irresistible. If it's not irresistible, then why else are they going to go with you?
Right.
So you want to try and add as much value, as much benefit as you can. And this is just one tool. There's many other things. Obviously, the product sells itself, our availability, our pricing. There's many things, but you want to make it to where they can't say no. And this is just another added benefit. So on top of servicing our loans right now in the mortgage industry, 95% of the mortgage companies sell their loans, so that also is another competitive advantage. The biggest mortgage companies like a Supreme or a Fairway or any of these companies, they sell all their mortgages. A lot of people don't like that. They get scared because if a company like Ocwen picks up their mortgage, they have a higher probability of foreclosing on them, and that scares a lot of people. Most people want their mortgage to stay with the person that originated it and have them service it. So that's also a very good selling point when you're talking to your borrowers. Say, hey man, you want to go with Supreme? They're going to sell that loan 6 times. You know who that loan could end up with?
Highest bidder.
Huh?
Highest bidder.
So.
And then, now that we hear stories all the time about how they change terms on people, and they're not supposed to do that. Just got that little fear.
All I know is that like Litton Loans and Ocwen, you probably, if you guys start talking to people, they're going to tell you that's their servicer, and then they're about to get foreclosed on. Don't be surprised if you get those stories. They've been under class action lawsuits because of purposely trying to foreclose on people, and that's where most of the loans go from mortgage companies. They get serviced by them, Nation Star, Litton, and Ocwen. So, but anyway, the thing is that the whole point of this is, yes, you're trying to add as much value as you can, and this is just another really good tool. So now we're going to flip it over to best practices. I passed out. Thank you, Russell. That was very good. Appreciate it. That was very nice. We're going to email that out to you as a PowerPoint. So if you can just email that to me, I'll send it out to everybody.
Okay.
All right. Does everybody have a copy? Does everyone have a copy of this? Oh, do you? I'm sorry. You don't have one? Okay. All right, Josh, can you pull up a Velocify?
Yeah.
Am I in the camera okay, Sean? Or okay. Basically, this is is that still recording? Okay. Well, when I put this together, this is basically, my time as an originator. This is all I can tell you is what I did to be successful, and this is exactly it. Do I know if it's the best? It's the best that I know, and what works for me, and what didn't work for me for many years. And so, I certainly am not saying that that you have to do this, but it's something that I can track down to a science that's worked for me very well. And so far, I haven't seen anything that's worked better. So far. So basically, where I want to go over with you, because I send these things out, and I want to make sure that when you guys you're looking at this, that you actually understand what these things mean, because you might read it and it may not connect to you. You may not understand it. So So I just wanna start from the top down, just make sure that we're all on the same page, and I really need to make sure that you guys get this. There's some really solid takeaways here. So the first thing is that in our business, most of the loans that I've ever gotten, were from the weekend or at night. So I want you to really think about that. The way that our business is for the super originators that are making 200, 300, 500 million dollars a year or whatever, the phone is with them all the time. The email is with them all the time. Okay? So, if you turn off your phone when you leave, if you don't have your phone forwarded, you don't want to answer on the weekend, you're just gonna make you could probably make like 80 grand a year doing that, 50 grand probably, but you're not gonna make 150, 200, 300, 400,000. I promise you. You have to have your phone on you all the time. See, I mean, no matter what you're doing, you have to have it on you. Sunday, doesn't matter what they call. If you don't have your phone on you and you're not responsible on email, when the realtor is going to take the bar to put an offer on the house and you don't answer, they're going to go to another lender.
Yep.
It happens. When it happens and you lose your money and you go broke that month, just remember when I told you that.
It's true.
Because it will happen. Yeah.
On that forward thing, how do you do that?
Away, yeah, what's away? I don't see that.
Well, that's a simple thing. We'll show you how to do that. That's a very simple thing. And you just get your phone programmed in there, your cell phone as a forwarder. But the main thing is that we have to make sure that we're on the same page of why we're doing that. You can have people call you when you're driving home. You got to answer the phone. Anytime you guys call me, I always answer the phone, right? Email me, I always get back to you. That's a learned habit that I've taught myself how to do. If I don't answer the phone when you call me, what are you going to think of me? You know, so you have to do that because first off, you're not in physical connection, contact with these people. So you have to give them the next best thing, and that's all of you. And so when somebody needs you, they need to talk to you, or whatever the case may be. Now, there's a way on how to manage that. Obviously, if the person's got a 530 credit, you're probably not going to do that versus someone that's getting ready to go under contract. So just use your common sense in that, okay? And think about if that's really the smartest thing to do. And so just understand the differences. It's like the doctor that, gets the call at 2 o'clock in the morning to deliver the baby. That's the equivalent of going under contract or closing, right? Not someone that needs to get their score up 100 points and they call you at 10 o'clock at night. No, that's not the same thing. So just understand, what the differences are there. And your cell phones, your laptops, that's all got to have your company email. You have to look at this as you're an entrepreneur. This is your business. This is your franchise. This is not a 9 to 5 bank hours. I'm taking my 50,000. I'm going home. This is not this type of setup. It's not. So this is your business. This area right here. This is your franchise right there. And so you have to think, why? How come you don't have your phone set up to your email, your laptop? And this is your business. Your business has to go everywhere with you. So, and that does take a certain type of individual. I'm not going to lie. It's not for everybody. I agree 1,000%. This is for people that they take their careers very seriously and they want to do very well financially. That's what's there, but you have to be 100% committed to it. So, that's what I say right here in the first two lines. Also, when you leave one thing I noticed that a lot of you guys, when you're leaving at night, you're leaving your lead queue on, and that skews your performance tracking because you're going to keep getting leads at night if you don't turn off your lead queue. So what happens is that if you don't turn off your lead queue at night and you keep getting leads, and then the relay time for you to contact them is now 8 hours because you come in the morning, it's going to make it look like you're doing a poor job, because it's calculated how long it takes you to get to the lead. And so you have to make sure you turn off your leads at night when you go home, okay, or wherever, if you're going to lunch or wherever, because the system doesn't know. It's going to keep sending leads to you.
It's going to look like that up in the top right, one red, and you're going to leave the calls on green.
Yeah, you can do that.
Okay.
Yeah. Another thing that I want you guys to be very careful of, I'm walking around your Encompass and I see a lot of red. That's not a good sign if I see too much red. You have to, that means that you're, that means that you're pulling too many credits under 580. Okay? That's not a good sign. So you should just have a few of those. If most of yours are like, if there's too much red on your Encompass, then you're not pre-qualifying the borrower good enough. You can have a few of them, but you're eating into your budget too much, and so you definitely don't want to do that. So does everyone know what I mean by this?
Will it show as red if you make them pay for it?
No. Well, yes, I'm sorry, it will.
Okay.
Yeah, it will. Let me just back up a little bit. So what happens is the Encompass is the loan operating system that we use, and if the customer has under a 580 credit score, the system basically goes through a clean sweep at the night and basically just pushes those out because they don't qualify. And all of us have a budget that we have to work within to pull credit, okay? And their budget's given to them based on their projected volume. It's 10 basis points of their projected volume. So if their projection's $1 million, they have $1,000 to spend for the month on credit. That's it. After that, you have to wait for the borrower or wait till the next month to replenish, or get it from the borrower, or you can pay for it if you want to. It's up to you. So if your system has a whole bunch of red in there because it puts a red, highlights the loan in red, that means it's going to get swept out. So that means that you're not pre-qualifying good enough. And why are you pulling this credit? Unless you're going to have the borrower pay for it. So you should only have a few of those, and you should do a good enough job. If you follow the sales script, that's going to eliminate 90% of you'll have some outliers, I agree, but if you're truly following the script, you pre-qualify someone so good you're going to know if it's a loan or not. So there's no reason just to keep pulling credit and then they have 520 scored. Well, why are you wasting time talking to them? You're missing the next lead. So, and I know that some of you guys are new, and we did that to you on purpose to train you, and that's fine. That's part of the learning process. But after like 4 or 5 of those, you should get the point that, hey, man, these people all come in a pattern. So, yeah.
What's the dialogue on telling them that they need to pay for their credit report? What would you tell them?
What would I tell them?
Or whoever, I don't know, just need some dialogue. Cause I find it hard, like when I'm talking to them and they're like telling me, I don't know what my score is, or I think it's around a 580, 590 or 600 or something, and then I'm like, they're kind of like hinting at me like, aren't you supposed to check that,
Yeah.
So what would you tell them?
Yeah, so what I would always do is I would say, okay, let's move on. Do you have rental history? Do you have income? I do the debt ratio and see if everything else checked out. Assume the other stuff checked out. Say, look, based on what you're telling me, I haven't checked your credit, but you have rental. You've been at the job for 5 years. Sounds like you have a low debt ratio. You're eligible for about 150. The next step is we have to check your credit. They charge $13 for it. I can email you the link to pay for it, or you can send me your secured credit card, and we can pay for it that way. Or if you want to, you can go on to annualcreditreport.com and actually order the full credit report that has the scores on it, and just send that to me.
Okay.
So once you send that one to me, now I can't accept Credit Karma, but if you go to annualcreditreport.com and actually pay for the 3 scores, those are fairly accurate to what I'm going to get. If you want to go and do that, you can, or you can do this credit authorization, and then we can complete the loan for you. So that's how I always told everybody.
Okay.
So, but you have to think about that. I mean, if someone's got a 550 credit,
Yeah.
Yeah. Now, I'm not saying that you can't turn that into loan. You mostly can, but the thing is that you have no idea at that point what's on their score, what's on their report. It could be a nightmare. So you have to use your, and you'll get there to where you have your awareness and knowledge to be able to make that decision. And so, if someone tells, definitely if they tell you they're 500 or 520, there's no point to pull their credit. I mean, I just don't see the point to do that.
Say they have a low credit score, should we ask about like co-borrower or spouse? I mean, would that help their situation?
Yeah, that all goes part of the the proper way to pre-qualify somebody. You know, because let's look at it like this. If they say that I don't know what my score is, I'm like, well, do you have rental? No, I don't have any rental. How long have you been at your job? 3 months. Okay, and how do you get paid? Commission only. Okay, now this guy is just, there's no chance. Okay, so, do you have a co-borrower? No, no co-borrower. I'm like, here, all of my stuff. Do you have any money for a down payment? No down payment money. Okay, then that's in 30 seconds, we're done. Next, okay. So I mean, there's no point to keep going around with this person. And so, and I'm not trying to get you guys to where you're, I know you guys, some of you are, you don't know these things yet and you're gonna learn it. But not everybody, you're gonna be able to save. You're not. I mean, it's just the way that the business is. Most people you will be able to, but not everybody. Probably about 30%. There's nothing. We can't help them. So you're just going to have to quickly get that out of the way and focus in on what we can do. And so we can't focus on people that we can't help. I mean, it's not our business. And so, so that's very important to understand that. And it's all part of the numbers. And so, and I go in here and I talk about that a little bit. Obviously, if you're funding $2 million plus, then we don't really have any issues. There's not really a credit limit. And then the process is, let's say, assuming that someone does meet the pre-qualification, you're only going to pull Experian. I think everyone's got that. You just pull one bureau, Experian in the beginning. That's it. Yeah.
You said something about $13. So when we're pulling them, we're going to pull the full profile on them, not just one. For say someone who's willing to pay for their score, to say, you know, well, we can charge you $5 for the Experian instead of the whole
Yeah,
three.
just have them pay for the whole thing.
The whole thing. Okay.
Yeah, I think that'd be better.
Yeah. Okay.
Yeah. The other thing is that, remember, you can only pull credit through Encompass. Okay. For the initial pull.
Right.
Very soon, probably in April, you'll be able to do the upgrade through Encompass too for the extra 2 bureaus. They're working on that right now.
But if they're using their credit card, you have to order.
You have to pull it, yeah.
You have to order through Funding Suite.
Yeah, actually, you do have
You
to.
do, yeah. I did it twice yesterday or the day before. And you go through Funding Suite, you got to bring it back. But other than that, you do it through Encompass.
Okay. No, you know, through Funding Suite.
Oh well, no. If they're not paying for it, obviously you can go through. But Encompass doesn't have the credit card option on there, so you have to pull the initial.
Yeah, I need to actually write that down. We need to add that on there.
Yeah, it's nice because when you go to, you have to do their information like twice. If you do it on Funding Suite, you have to put it in there all again. So it kind of takes a little bit.
Okay. The way that you guys need to look at the phone ringing, I want you guys think about this for a second. So we know that from our studies that 20% of the leads that call in, that they close. Okay. So, and that's over an annualized period. That's not over in one day. So that's over an annualized period. And so we have to, let's just put this in dollars so we can see how this makes sense. So, you know, why would we ever, if we had these type of odds, why would we ever let the phone ring? Just think about it for a second. I mean, if 20% of the leads that call in closed, that's the equivalent of saying that you get paid $200 for every time you pick up the phone, whether it's a lead or not, whether it's a deal or not. Just you get $200 just to pick up the phone.
It's a little plastic box.
Yeah, I mean, just think about it, because let's just say the average closed loan to you is worth $1,000. You're extremely conservative. Let's say it's $1,000. So we know that a fifth of that is 200. So when you close 20% of what you answer, so just to get $200 just for picking up the phone. So, you know, there's no point to let the phone ring anytime. Your hand should be glued to that phone. People are calling in. I mean, you have no idea who's going to be calling in, and you have to condition your mind that you are treasure hunting. When you treasure hunt, you go through a lot of stuff to get to the goal. But the whole idea is that if you can get five of those a day, you're going to knock it out of the park. But you have to quickly get rid of cut through the junk and get to the gold. So that's the whole idea behind mastering this business is the people that don't qualify, you need to move on up the road and get them into some type of plan if they can, and then get to the people that can. And so so it's just very, very important that you answer the phone. And then we go into this is the final part of this is the lead queue management. And we got, we have some examples here that I want to talk about. And so basically I want to go over this with you. I want to make sure that everyone understands the statuses and how to use this. And again, this is based off of, 10 years of me originating and what worked best for me. And obviously there's things that work better for different people. And all I can tell you is what I know. And, and basically from that, it's proven to be successful. The people that have actually modeled it in its entirety have all done very well financially. The people that haven't modeled it, they haven't done well. They do half of it, but they don't go all the way. So some of you might think that it's extreme, but I found that's what works for me, and it made me a lot of money. So I just all I can tell you is what I did, to do it, to get there. And obviously there's many different types of leads as far as customers in different situations where you're not going to obviously call somebody that many times if you already have something predetermined with them or scheduled. And so that's not what I'm referring to. So John, can you close this? What's this right here? Okay. So now go to all statuses. All statuses.
It is all status.
No, you have 13 statuses. Go over here. Right here. With that,
We look down here.
and I'll hit this right here. Okay. Hit that. Now hit go.
Right?
Did you hit go?
Yeah.
Okay, now hit date added. Oh, you got logged down.
Who's manning that mouse?
Okay. I don't know when you got logged down. I have Josh.
You can get Josh logged in.
Okay, so we'll get that set up, but we can talk about this in the meantime. So I have this, and I sent this to you guys in email, and I printed it out to you just for you to look at. But basically, this is what's worked for me, and again, people that have done very well are doing the same exact thing, and it translates into their paycheck. It does take a discipline, and you have to be extremely focused. And I mean, you're on the phone all day. I mean, but the biggest thing that first off is that you have to do a clean sweep of your entire queue before you leave. You have to go through every single lead should be accounted for every day, right? So it's just like if you're, any business that you're running, you're not going to leave that business without knowing everything's been accounted for. If you own a restaurant, you're not going to leave that restaurant without checking the inventory in the cooler and the cash register to check your till. So if you're walking out of here and you don't know what's going on with these leads and where these bars are and these different statuses, you're leaving too much money on the table. You really are. And so you have to go through that whole. That doesn't mean you're calling every single lead. I'm not saying that. But you have to know, okay, is this person John scheduled for here Tuesday at 2 p.m. I got him on my calendar. This one's here for Thursday at 4 p.m. I send them an email and text to follow up, and I got to call these people right here. I called all these ones right here. I send these ones messages. You have to have that all down, okay? So you have to go through the entire queue every single day, every day. And what this is doing is it's creating a massive amount of momentum, so these people can move along to the different statuses. The leads convert at the highest rate right when you get them, okay? And so you want to quickly get them in through the system, and if they don't qualify, get them over to Nurture or somewhere else so you can get more leads in, okay? You're not going to get more leads in if you're still struggling with the ones that you have. The system doesn't work like that. Whoever is, okay, the way that for optimal results, when you get your leads in, they have to have that final outcome within 10 days, okay, for you to get more leads in. The system, the way the system tracks you, it's based on how effectively you're working your leads that you get. So if you're sitting over there and you got leads that haven't been that only been called twice in the last 5 days, you're not going to get more leads. Why would you? Why would you get more leads based on that? So what happens? You end up digging yourself and putting yourself into a hole, because the other guy next to you is following the system. He's getting new leads, so he has more occurrences. Where you're still struggling with the leads that you have now, and now they're old. And you have to really understand how the business works, or otherwise it's not going to make sense to you. So if you follow through the system, and it's just like it's a perishable. Leads are perishable. Okay, it's just like you go and buy milk. If you leave the milk out on the counter, it's going to go bad. You have to hurry up and you have to move it along. You have to keep moving along. Okay, so if you don't do that, you're not going to get more leads. What happens is the system sees, okay, this guy got 30 leads in the last 5 days, and he only has 60 contacts attempts. He's supposed to have 120. So what it does is it adjusts your leads downward for the following week. So now you're getting 5 an hour, now you go to 2 an hour. Whereas the other guy next to you, he was getting 5 an hour, now he's getting 10 an hour because he's converted more. So again, following the law of large numbers, the more occurrences you have, the more successful you're going to be, because you never know what the next lead is going to be. So it's very, very important that you understand this, that you want to get these leads through these different statuses and move them along. And so, give me an example. You guys saw the gentleman that came in here on Friday. He was wearing a suit, the older guy. You remember him?
Mm-hmm.
Okay. He had interviewed for a position with me about a month ago over the phone, and I put him off on purpose just to see what he was going to do. And he kept calling me. He would call me twice in the morning and once at night, every day. And then he would send me 3 LinkedIn messages every day. And I kept avoiding him and avoiding him. And then the more I avoided him, he'd call more. So finally, after 3 weeks, I felt bad for the guy. I was like, man, this guy, he must have called me like 100 times. And so I said, man, all right, man, you can go on, you can come in. So it's fine, I'll talk with you. And then so he came in and we talked with him. That persistence, that execution, that pit bull mentality is why he's so successful. He's a very successful business development person. And you have that stranglehold on something and you do not let it go. You have to be like that with your business. Okay?
Do you get the job?
Potentially, yeah. So I'm still working out the details with him. But that is the thing that you have to have. You cannot let go once you get your hand on it. And so those are the people that are super successful, super elite, whatever it is, whether it's loan origination, investing, basketball, whatever. So you have to have that type of mentality. And where everyone else just sends a little resume and hopes to get a call, this guy wouldn't let up. He made it the dominating thought of his mind to get the job. So, those are the people that win. And here's what, and new leads. Okay, here's the thing. The first day that lead comes in, and the first day the lead comes in, this needs to say 3, not 1. This needs to show 3. Okay, the first day it comes in. This lead came in on 3/11. That should already be like a contact 8.
Will that change automatically? Or?
Yes. Yes. So if you follow the system, how many of you guys have called someone back to back and they answer the phone?
Me.
Okay. Well, I mean, and so if you look at this over 1,000 leads over 6 months, how many more fund loans that could equal? Just by doing that one extra step. Don't look at it just one lead. Look at it over 6 months or a year. You can't just look at it at one lead. Yeah.
So I have a question. I mean, I get a lot of like, either a bad phone number or whatever, but their email's right there. And it's like almost to the point where it's thinking like, I could just send a quick little email and say, hey, your phone's not working. It could be a good loan. I mean, or just keep with the the process and let the automatic email hit them because you're saying, no contact. But I see on there that, no voicemail, no voicemail, no voicemail. It's like you're kind of only doing it because there's going to be no voicemail. You should maybe take another side step to maybe just see if it's going to work or not, a different email. I don't know.
Yeah, no, you should definitely do that.
Okay,
You
I
should
just cut my custom email.
Here's the other thing. If you get a phone that says bad area code, what I used to do is try to figure out what was the right area code.
Right.
You should never just put a lead to nurture because there's one digit off or the wrong. You should try to plug in any number you can to get that person.
I had one yesterday, 254, and I put 954, and it was a Broward County number. They put it in wrong.
Yeah, I mean that. But I've seen so many people move that to nurture. Actually, one of the guys that Mark, one time he did that. It was a huge loan, and I said it was in Massachusetts, and it was the area code. I went and looked at his action log and said wrong error, bad phone number. And I've been through Massachusetts. I don't know the area. So I just looked at the city the person was in, and I put in area codes for this city, right, in Google. And it gave me the right area code. It was one digit off. We called her and got her on the phone and got the loan.
I have a template, whenever I get that phone number and it's a new lead, I usually just send them an email like, hey, I tried calling, I received your inquiry, I tried calling up this number, somebody answers and they say it's the wrong number, or the call just doesn't go through, and I tell them, and then, just saying, just wanted to, touch base with you, love to, go over your options, calling your convenience, or.
Yeah, no, you can do that. I always assume that, I know that Velocify sends out an email and the text. I always assumed that it didn't work, and so I always sent my own email. I had a template, I'd always send it.
Gotcha.
And so, I always have my email as an overlay to that one, or as a backup. But the thing is that, so I think that we get hung up, or we think, this person's gonna get mad that I'm calling them too many times, and you're focusing on the wrong thing. You need to focus again on what you want, and not what you fear. Focus on what you want and go after it. Don't focus on what you fear and think the customer's going to. The customer can't do anything to you. Okay, what are they going to do to you? Okay, they called, they applied for the loan. They came to us. This is not cold calling. Why did you fill this out, man?
Right.
You said don't call you. You said, hey, you filled this shit out right now. What do you want? So, no, I'm serious. I mean, you said to call you, right? I didn't buy this. You applied with us. I mean,
And if not, it wasn't you. If you're just doing
okay,
your job,
so,
looking up.
but then they say, okay, no, okay, okay, we're done. Or either that they're either going to yield or you're going to move on, one or the other. That's the only thing you have in your mind. Okay, and when you have that type of mentality about it, you're not going to worry about what anyone says. It doesn't matter anyway. I mean, it doesn't matter. So if you're thinking about the wrong things in your head, I mean, just stop and think about, you have these impulses and they make no basis in reality. I mean, are they going to come through the phone and beat the shit out of you? I mean, what are they going to scream? No, they're not. I mean, that's 1% that do that. Most of them are gonna, say, oh, thank you for calling. I'm a little busy right now. Call me later. So 7 p.m. I'll be right there. I promise you. So you have to be like that, and obviously, yes, of course, with everybody, it's not gonna work. But the key thing that's so great about our business is that for the 6 to 8% that does work, and if you can get the 10%, you get paid very well. So, but you have to do these things. in order to realize that. If you now, see what happens is that, I mean, just, you have to break this down, and it's all mechanical, it's all statistics. You know, if you have a lead that, you know, came in, you know, here, let's say that, you know, on the 11th, then you've only called it 3 times, and you compare that to, let's say, you know, again, you take a sample set of 100 leads, you missed out on potentially 5 loans. I know it's hard for you to see that, but that's really how it works. Just because of how things are with they call it the law of random walk. You might have heard of random walk, and that's what it is. And if you follow that and you make the calls, then just by the way that the number of occurrences works, you're going to scoop up those extra loans. And you have to really see that and believe that and understand that. It's still the same person, but it's just by you making those extra calls that you're picking them up. Because again, those first two contacts in the beginning, out of 10 of them, 2 of them picked up, 1 of them was a loan. But if you never made those calls, then that reality never happens. So it's just very, very important that you understand that if you want the numbers to work in your favor. And that goes, and you know, that we and I talk about it right here. Obviously, if you reach someone and they're working on getting something in, or you have something scheduled, you're not going to keep calling them. That's not what I'm saying here. That's a different situation. But on day 2, same thing. You have to have 2 contacts, 1 in the morning, 1 at night. Day 3, 2 contacts, 1 in the morning and 1 at night. By the 6th day, that lead should be ready to go to nurture. You have to get that thing through the system and move on, so you get more leads in. You got to you have to keep the river has to keep flowing. Okay, you have to get more and more and more leads in and get through those that you want to. Basically, you have your A pile of your conversion, and the rest is going to go to nurture. This is what I brought in. The rest is going to nurture. Well, in order to do that, you have to keep that thing rolling. So it's very important that you guys really get that. Same thing with app pending. So you know, this part, you know, you've already kind of initially taken an application on someone, but you need more stuff to get in. And I see this as a huge thing with you guys, where you're a big area for loan officers, where they get hung up, as in this app pending status. They talk to the person, sounds great, but you're missing some stuff to get them the loan, and nothing ever happens, just fizzles out. So it's not over. You still have to have that pit bull mentality on them, and you know, you're going to keep calling them every single day unless you have a predetermined date with them when they're going to get you their items. Hey, you told me that you wanted the loan, and I told you what I needed. I'm calling to follow up with you to get those things in. Where are we at? I need to get you pre-approved. That's exactly how I talk to someone. Are we getting you the loan? What's going on? You know, I need to get this done. I would light a fire on them because I have a sense of urgency. You know, we need to get it done, guys. You said you want to get pre-approved. You saw the house you want. Let's go. I mean, if not, then put it in the nurture. Okay. You know,
With app pending, you only want us to call 7 times?
I mean, you could do 10. That's something that Josh was testing. I only did them for a week. You know, I think Josh was testing something with 10. I think it's a little excessive. According to our study the 10-year study, I think it was after 7.
Yeah, 7 or 8.
Yeah, there was no point to keep doing it. So
I think on the 9th or 10th contact attempt, he generated an automated email. It's like your request about to be canceled.
Okay.
He was getting a lot of bites from that. So.
okay, well, he could either down that to 7,
Yeah.
or he could.
Sure. Yeah.
Wait, were you talking about pennies or contact attempt?
App pending.
App pending.
Oh, never mind. App pending. I think that's a bit much for app pending, honestly. 10 attempts. Yeah. I think 5 or 6. I mean, 7, 8 definitely, but 5
Yeah,
or 6.
if you can't get him from that, then it's just, you know.
Yeah, so I think, so let me talk to him about that. We can probably fix that, but the thing is that, again, having that mentality, have you guys ever been, I don't know, I mean, on the opposite side where you're the customer and someone was really, really lazy and didn't get their shit done when they're supposed to, and someone else was like just all over it? I mean, just relate, go back and relate to it. I mean, and to see who you end up probably going with, you know? It's just like I can think about when I bought my car, and the first dealer I went and talked to, he was really rude, and he wouldn't help me. And the car that I wanted, it was on back order, and he just wouldn't return my calls, wouldn't return my emails. And I finally said, man, why the fuck am I dealing with this guy? I mean, this is ridiculous. And and then the other dealer that I was talking to, I could text him right now and he'd call me. At midnight he'd call me. And he'd do whatever I need. I mean, within reason, to make a deal happen. And those are the type of people that are go-getters, that are very successful. They make a lot of money, and that's why I went with them. I even paid a little more, but I wanted good service, and so you have to really think about it and reflect on your own life when you had bad service, you had good service, and the things that person did and why they won you over versus why you didn't go with that other company. And so a lot of times it has to deal with level of service and being persistent, and just execution, man. So, and then the other part of this, the biggest part right here in this whole thing, I think, is this pre-approved spot. So so now you've gotten the customer pre-approved, and I see this is a huge area where I see that new loan officers, where they fail. And I know Russ and you talked about this last week. How do we increase this ratio from that pre-approved stage? And Mark doesn't mind me bringing this up. Not Mark Allen, Mark Henderson. When he first started, Mark was very good at originating and getting people pre-approved. He probably has the highest. I don't know if that's current. He normally has one of the highest pre-approvals. And high apps. But he was very weak in fundings, the ratio from pre-approved to fundings, the ratio. So he'd get all these people pre-approved, right? Have 100 pre-approvals and then close 8 loans. And it makes you wonder, like, what happened to the other 92 pre-approvals, man? And we're like someone like, when at that time I was originating too, and I closed like, if I had 100, I'd probably close like 40 or 50. And so it looked very strange. And so in his head, we ended up analyzing and breaking down and find out what happened. And this is when he first started. And so when he pre-approved the customer, he thought in his head that the deal was done, and that there wasn't any more work that was needed. And then the customer would call him when the contract was ready. When it was ready to go into contract. And our business just doesn't work like that. So he would wait for the customer to call him when it was time to go into contract. And so after that, we ended up developing a pre-approved pipeline for him, and we brought in a loan officer assistant for him to go and call all the other customers that he lost, and he lost them. They went with other lenders. So I never heard from him. After we lost touch, I didn't hear from him anymore. So I just, this guy was calling me all the time and texting me and emailing me, and I just went with him. So that tells you a lot about human beings. That most people, whatever's in their face, they're going to go with it. And so even though Mark was nice, really good to him, but that communication broke down and he didn't keep it. It's just like any relationship. What did I say to you guys in the beginning? If you never wanted to be an end, treat it like the beginning. If you never wanted to be an end, treat it like the beginning. And that has to do with anything. Your us working together, your personal life. And if you treat it like you do in the beginning, there's never going to be an end. and it was a good lesson for him. Thankfully, he's gotten his performance up from that point. But the takeaway here is that once you get someone pre-approved, and now that we have the loyalty network with Christina, you still have to be on top of all that. I mean, look at it like this: 100 pre-approvals is effectively $15 million in your business. Okay, so so how much is that in dollars? How much is that? That's your money. So how much is that? $15 million in loans.
For us,
Mhm.
that's 150,000.
150,000, and you have you can't account for it. That's ridiculous. You don't even know where your customers are at right now. I mean, you stop and think about that. How are you going to be successful then? If you don't know if you don't know Johnny's putting a contract on a house tonight, or he's over here at this restaurant, or what's going on with him, you're not on top of your business. I'm just telling you. I mean, and so you have to be all over that, man. That's your money. This is not. You have to get out of your head that this is a 9 to 5 or clerical job. Okay, that could be $100 million pipeline. I mean, you can make this thing. You've seen the people that are making millions of dollars, man. It's not a fallacy, but they took the job very seriously and they did something with it. You can really make this as big as you want. The point is that you have to be on top of that with Christina, with the realtor, with texting, emailing, calling. You have to be all over these people, man. And that way, that ratio will go up. You'll have a higher conversion. So you have to spend, twice a week, usually in the beginning of the week and at the end of the week, following up with them, or with Christina, or a combination. If you can get the borrower to go through the loyalty network, you most likely have a higher success rate. It doesn't mean that if the borrower goes with their realtor that you'll lose the loan. Just make sure that you contact that realtor and that you develop a rapport with them, because that could be your new go-to person for that state. And you let them know, hey, look, I'm a nationwide lender. I'm going to give you pre-approvals, man. I want to work with you. And we can build this into something great. There's no reason to be a shyster. I want to bring more loans to you. All these realtors that you guys are working with on our network, those are all people that I've worked with for years that we've done business together with. I don't know if you guys are talking to these people like Dan or Aaron, or if you guys are still working with them. I think Fernando, you are, right?
Dan, no, I had one deal, and I think it died with Supreme during the transition, so that was the last one. I think Aaron, she was in Florida, right? Yeah, there was a good one a while back I did with her. They never sent people our way. That was the only thing. Like you gotta have people that'll return the favor.
That's because you're not me. That's why. No, you have to get the business, man. It's not gonna fall in your lap. You have to go and get it.
No, I asked him plenty of times, man. Kevin didn't like that either about Dan. He hated Dan.
Yeah.
Every time he talked to Dan.
You know what though? It was funny. Like he would get them closed. But then when I said, okay, fine, go and try and find another realtor, and everyone spent like 2 months trying to find one in Oklahoma, they gave up.
No, he's good, but I still use him. But
Yeah.
You want to build this relationship. I think Sean's starting to work on that, so like,
What?
he's getting started early. Getting those realtor.
Yeah, actually, I had one from Idaho that's with the Keller Williams Network. Called me up and goes, what's with these USDA loans? I've never done one before. Explained everything. I said, well, I just opened up your pipeline. Now you can go out and look at these houses because it's in Idaho. Everyone it's available. So she actually wanted the USDA map, sent it to her. As soon as I sent it over, not 2 seconds later, received it. Thank you, heart, everything. It's good.
Art. XOXO.
XOXO hugs and kisses. So, I mean, and it just took answering the phone call and saying, yeah, we do all this. You don't know about it? This is the greatest in the world. And she goes, no, I don't know anything about it.
Yeah.
So tell your friends. Get them to me.
No, it's good. See, that's a good attitude, man. That type of mentality, man. That's really good. That's really good. So, but again, same thing here. You keep calling them, and if someone's not getting back to you after you've gotten the pre-approved, they need to go to pre-approved nurture. Let them work through the system. Let the mechanics do their thing. And what we find is that 5% of these people come back and they'll close with you anyway after they go to nurture. So, but you need to have that sweep of your queue so you can move on to the new batch. Okay, and so otherwise you're gonna get lost in the ether with everything. And so having that organized is extremely important. And so that's the crux, the hallmark of what we do. How your paycheck is a reflection of this, how well you manage it. So, you guys have gotten a lot better at it. And you just need to keep getting. It's progress. You keep getting better. You're conscious of it. You keep getting better. And so, you're not going to get it overnight. But I think that I need to do my part, explain to you what the parameters are, the framework, and then you guys need to just go in and execute on it. And listen, I mean, the people that do it, they do very well. And so I know it's interesting, but you can always see who's making a lot of money, who's not, and it always comes down to right. It comes down to this. So. And now here's the thing, this could be manipulated. So, you want to make sure that you're, inherently doing the right thing when you're statusing these people, because that's a whole other thing that we know when somebody's manipulated the queue. So, and that's not what I'm talking about, and so as far as moving through the statuses, that means that you sincerely have tried to go through all these leads and see what qualifies in A pile and B pile. And because if you're getting 200 leads and you're only funding 1%, there's a problem. You should be funding at the minimum 6% of what you're getting. So if you're not, and that's not based on your first month here. I'm talking about over like a year's term. That's what you should be funding. So you just want to do your best, and this is the system that's worked very well for us. And we're always open to new ideas and new things. But if you look at it, what I see here, the underlying theme of the whole thing is just you have a sense of urgency. You're on top of your business. You know where all your leads are at, your barbers are at, and this is your franchise that you're fully enthralled with, and you know exactly what's going on with each lead. Somebody that has that type of obsession is going to do extremely well. And the other thing is not wasting a lot of time with stuff that's not going to go anywhere. Don't waste time with things that aren't going to amount to anything. Don't talk to someone about a mobile home for 2 hours. Okay, so it doesn't make any sense unless it's $200,000 loan or something. So you guys, you realize how you get paid off of the volume. So that doesn't mean that you just discriminate against a $60,000 loan if it's viable to do it, but you obviously want bigger loans. That is important. So. But my mantra is if the person was ready to go and I could help them, I'd help them. If it was a $60,000 or $200,000. If the person was a good attitude and I could work with them, then I would. I know some loan officers do that. They won't talk to anyone below 80. I never did that. If I thought I could help the guy out, I would. Everyone's different on that. So that was just me. But the point is that you have to allocate your time very carefully. You have a limited amount of time here, and you have to be very careful of where you're putting that time at, and knowing what to do when. And the biggest question that I always ask myself every single day, that you guys need to ask yourself too, is what do I need to focus on? I mean, what's going to move the needle the most in the business? When you wake up in the morning, that should be the first thing that comes to your brain is, what am I going to focus on today? What's my outcome? If you're pushed and pulled all over the place, you're going to be a mess in your mind. If you're like that in your mind, your business is going to be like that too. If you're pulled over here, pulled over there, pulled this way, pulled that way, I mean, how can you do anything? If you ask your brain that question, what's my outcome for today? What do I want to accomplish today? Your brain's going to show you what to do. So, but you have to have laser precision on what you're going after. And you have to, all this noise, you have to tune it all out, because that's all junk. And you have to focus on exactly what you're going after. So it's very, very important that you have peace of mind and clarity on what you're doing, so that way you don't get sidetracked. It's very easy to get sidetracked and get off course. You have to stay focused. And so what you're going after. That's a very, very important thing. That goes into a lot of psychology and a lot of stuff that we talk about. But that's something that you can at least go for now and have that in your mind. That's a good question. That what's gonna drive the needle the most in my business? What should I focus on? These are very, very important things that you should know what you're trying to accomplish for the week and for the day. So. Anyone have any questions about what we went? I know we went over a lot of stuff, and some of it. Is anyone confused about anything, or have a comment, or doesn't agree, or says why do we do it like this? So I want to make sure that we get it all out. So what's running through your mind?
So definitely having sort of a plan and a strategy, and knowing what you're doing every day. Kind of what you said with what's going to move the needle in the business, that stands out. It's just thinking in the morning, what am I going to do today that's going to impact everything, and having that focus throughout the day.
Mm-hmm.
I think that'll keep you from getting sidetracked with different things going on. Because I agree. Like your mind sort of, when you know what you're going after, your mind automatically kicks out things that aren't going to help you.
That are not going to help you?
That are not going to, it blocks you from getting distracted, and kind of, like when things come up that just aren't aligned with your goals, when you're focused on them, it's easier to push them aside. When you have that focus and you know exactly what you're trying to do. Right.
Right. Well, that's what I'm saying. You have to, and I mean, I was going to, bring that up, but you have to have obviously you have to have a vision for yourself, and you have to have a dominating thought consciously about what you're going after. There should be everybody has a dominating thought, whether they're conscious of it or not. So, if you watch someone, just watch them, they're reverting to it all the time. They don't even have to open their mouth. You just see what they're doing. Just to go watch all you guys, watch him, and then you're going to see who that person is. And so, because but it's either conscious or it's unconscious. And so we want to get out of the unconscious and get conscious about what we're going after. And so that way you can have the most meaningful life, the most empowering, because we're not animals. We have a conscious, and we can do a lot with it. And so, yes, you want to get centered, get focused on what you're going after, and get all the junk out of the way. And like you said, that way, when those distractions come, you could just, push it out. And so, because that stuff's going to happen all the time. That doesn't mean that, that it's bad to take a break and go play pool or darts. That's a good thing. That's supposed to reinforce that. That's not what we're saying. It's just that know that you need to be on top of your business and making sure that for me, I don't leave this office until I make sure I hit all my stuff. I've always been like that. We talked about, who was that said that the other day? you, Sean, you told me you're not gonna go home until you get,
Right.
say, 4 apps or,
Yeah. Well, at least one pre-approval.
yeah, well, you said 1 pre-approval a day. See, if you have that in your mind, and that's your focus, then you're gonna do that. It's forcing you to commit. See, you have to have something sizable on the line of why you're doing this. You want a house for your family, you're moving up here, making a huge change to your life. You gotta get your shit together, man. You know, and this is how you do it. That's your money. You know, and so, and I love that. I mean, I actually had something very similar. It was just with more numbers behind it, but I mean, you know, but still, I had that focus. I would not leave until I got this done. And you develop those habits, and that's what it comes down to in the end. Like we said, you know, the other day, the chain of habits, too light to be felt until it's too heavy to be broken. You know, you have to develop the right habits, and you want to develop the habits of success. And we can change our habits at any time, just by getting rid of the old ones and replacing them with new ones that are more empowering. So, we all have vices. I mean, I'm not trying to say that anyone's perfect here, but just trying to get more, integrated, be more successful. So, anyone else? David, anything? Josh, John,
I've
Rusty?
got a question. I know we're talking about, approving customers on credit. I just want to know how approving customers with a co-borrow works. Say you have someone with a low credit score, and they call and they say they have a 560.
The primary borrower?
I'm sorry?
The primary borrower
Yeah,
says
the primary borrower is a 560, and you get someone, they say they have a co-borrower, but they have like a 605 or 610. Like,
Okay.
would they qualify for an FHA? How do you qualify somebody on credit if they have a co-borrower? Does it average out, or?
Mid-score, the low person.
Mid-score and the lower.
Well, okay, let me make sure I understand. How do you qualify if someone has, so basically in that case, are you wanting to put both borrowers on the loan?
I mean, I would think whatever they want to do to actually get the home.
Well, in that case right there, with those particular credit scores, you could just use the co-borrower, and that would be the primary. And we couldn't use the primary borrower at the current time because of their score, unless we came up with a plan to get their score up.
Okay, so no matter how high the co-borrower score is, if the primary borrower score is too low, it won't work out.
Yeah, I mean, it's, you can't mix them.
So co-borrowers for adding income, adding asset, really, it's not adding the credit score in the sense because you're, right?
No, it's not. If they could add both the scores together and,
No,
The decision-making score is the mid-score, the low.
well, I guess, I understand what he's saying. Okay, say that a person comes in and she has a 560, but her grandfather is a 700.
Uh-huh.
Okay, so the only benefit of adding him to the loan is his income, not his credit, because she has such a bad score.
Yep.
Because he's not going to get the loan for her, she's going to be the primary because it's her grandfather.
Yeah.
Okay, so really adding him as a co-borrower is no help to her because she's got a 560. It's dead in the water for her. She can't add a co-borrower and make it go, even if it's a 700 co-borrower that's got a 700 score. I'm
Right.
saying that the co-borrower is only the things he's adding to it is the asset or the money he's bringing in every month. That's the only thing that he's really
Right.
adding to the process.
But what's your point there?
That's not necessarily true.
So
But what are you trying to say though?
So what I'm saying is that okay, so if someone comes and says, "Oh, I have a 560," that adding a co-borrower is not going to do anything about it because she still has a
No, but
560.
what you could do in that case is the grandfather could just purchase the home as an investment property for her.
Oh, okay, so
That's an option.
Yeah, so I think what he's saying is, say you got somebody with 560 credit and they make 50, 60 grand a year,
Okay.
and you got somebody with 700 credit, they only make 25,000 a year or $15,000 a year in SSI or something.
Okay.
What kind of home can they get?
And that,
Or what are their options?
okay, in that particular case right there, if it was me, what would I do? I would look at the person that has a 700 credit and see if we can bring in another borrower with them.
okay, all right, okay. So bottom line, you can't do anything with the 500
Well,
score.
if that's not possible, I would say, look, here, can we, your credit right now doesn't qualify. At first, I would say, okay, can we get this person from 560 to 580 or 620, whatever. If I could do that quickly, I would take Granny's credit and add her as an authorized user onto the primary to help boost that person's score. If I look at all those things and see, okay, can I get a secure card? Can I do authorized user? If those aren't options, and with 25K, they can only get 70 grand, and that's not enough, they need 120, then I need Granny to go get Grandpa and come on the loan. And so, because with FHA, you can have up to 5 borrowers. So, yeah, we've done loans with 4 or 5 people, man.
But regardless, you had to get her credit score up regardless of putting people on there.
We've done them. You can add as many, I mean, with that, I think, what's the max? Is it 5 or 6?
I don't know, I thought it was like 4 or 8.
So what I think Sean's saying though is like, and I was asking kind of similar questions, no matter how, if their credit score is too bad, no matter how much income they make, it's not worth putting in the home loan.
I mean, yeah, I mean, it's like, you know, if you try to, you know, you have a 30-inch waist and you try to fit into 26, you know, it's not gonna work. I mean, you know, so.
So, this is the deal, that if you have somebody that has like, let's say they have very limited credits, a 600 score, but they don't really have any active trades, it doesn't make a strong FHA loan, because even though they have a 600, that's great, but if they have the ability to have a co-signer that has solid credit, now you bring credit to the table. That even though that person has a 600 score, you bring in something solid to complement it.
Well,
Other
I'll
than
give you an
using
example.
assets.
Yeah, I mean, like for Fernando had this loan in California. The son is the primary borrower. He has no score. He makes like 80,000 a year. But the dad has a 650, but he makes 25,000 a year, right? So and the guy wants $500,000 for the house or whatever. So, so obviously you don't want to let that lead go. So you'll figure out how to get a score. And so, so the dad had a credit card. They're gonna either add him as an authorized user to the son, or he's gonna go get a secure card, one or the other, to get that guy's score up. And John was looking at this on Saturday. There was a guy that here in Houston that's buying a house in Colorado, has no score, and the what if told him if he has a secure card, he gets a 680 credit score.
What did Josh do that one today?
Huh?
For his plan? Johnny, it's pre-approved. Pre-approved, baby. Come on, baby. But
So-
what happened?
Just by adding a secure card, he went from no score to 680.
When you're adding the authorized user, is it the person with the bad credit that you're adding on to a good card, right? It's not the
Well, it's not they have bad credit. They usually have thin credit.
thing, okay.
Normally what you see that if someone has bad credit, they're probably not gonna be able to get a loan right now. That's credit repair.
Thin credit.
Normally people that are 560 and 580 and they don't have bad credit, they just have no credit is the problem. So if someone has a bunch of crap on their credit report, they're probably not gonna be able to get a loan right now. So there's a difference between bad credit and like thin credit. So, so we have to make sure that we look through that credit report to see if they got a bunch of collections and judgments and liens and all this stuff. It's gonna be pretty tough to get that deal through. So most of the time, these people, I mean, most people don't know about credit. Really, they don't. You know, and so, so you know, you want to, in the case like that where they have a thin credit, you want to build them up. And that's really what the trick is, or what the idea is. And so, but no, in that case right there, I'm just saying something simple like that. You could shoot someone's score up big time and help to get them a loan. I promise you that if you talk to another lender, the other lender wouldn't even know what to do. And that's just, to me, it's ridiculous. It's a no-brainer to me. And so that's what I'm talking about, missing opportunity. We actually did a video on that. You miss every shot that you don't take. You're missing opportunities like that. This stuff's in front of you, and you're just walking right past it. And so, and I'm not saying you guys specifically, I'm saying just the industry as a whole. You know, and so, but no, in this case right here, you want to try and bring in a few more people to the deal. I've done them where, grandmother, grandfather, son, brother, and with FHA, they don't have to live in the house. But,
You don't?
no, not with FHA.
Seriously? Looks like stab you, man.
Co-signer.
Not argument co-borrower?
Yeah, with FHA.
You know that.
Yeah, I did. Just kidding. That's me.
Okay, so for the USDA to become an authorized user, if you're on that, it has to be the co-borrower only, correct? That you can become an authorized, and then FHA, you can do non-co-borrower or co-borrower. I have a note here that I was just going off of that.
If you look at the Elo hacks, it has it on there, but basically, for USDA, in order to not be a manual underwriter, then the person either has to be the spouse
Gotcha,
or occupy the property with the primary.
gotcha.
Now it could be a non-spouse or non-occupant, but then it goes to a manual underwriter.
Okay, so that's the difference there.
That's the difference.
Okay, gotcha.
So it doesn't mean that they can't get the loan. So sometimes, let's say that person has no spouse, or they have no person that was gonna live in the home with them. They still get a authorized user, and you know you can get them in as a manual. Well, that's a way to get the loan in.
Of course, yeah.
Your brain needs to be able to figure out how in 5 minutes how to get a loan in.
I get it.
Sometimes you want to bring it as a manual. Sometimes you have to. Sometimes that saves the deal.
Sure.
You know.
Now, the manual is, explain exactly, is that just someone that's physically taking it and scrutinizing it more? I mean, what's the broad sense of a
Well,
manual?
you're not using the automated underwriting system
Okay.
to get it approved. I mean, they still run it through there, but it gets a refer eligible. And so the underwriter, basically, there's gonna be more overlays, there's gonna be more requirements, you know, so they look at the rental, they look at reserves, they look at the trade lines, they look at time on job, you know, all these different things. They look at it a lot differently, because what happens is that, so there's something called what's that ratio, Josh? Oh, compare ratio. What happens is, as a lender, when you make loans, especially when you're a DE underwriter, if your loans that you underwrote go into default, they track that with your license number. And so, like your license number, my license number, they track all that stuff. So, and HUD's very transparent in that sense. So, manual underwrite loans, if you start, you know, funding a lot of those loans and they go in foreclosure, it looks bad, because it looks like, you know, that there could be some type of, you know, manipulation to the system to get those loans through. And they don't have the same reps and warrants as basically the same type of insurance protection to the lender that an automated underwriting approval does. So when they go to file the claim with HUD, there could be more scrutinizing on those type of loans. And there's a ratio that they publish, and if your ratio is too high, then you may not have investors to buy the loans. You might even be at risk of your job, because what they'll do is they'll look up your license. I'll look at this person at 82 foreclosures last year. I don't want you to underwrite my loans.
Right.
So
Sorry, I got mixed up with Supreme. They had that rule where it was non-occupant co-bar where they had to qualify their own.
oh yeah, that's right. Yeah, no, that's not really an FHA guideline.
Yeah, okay. Yeah, it was good.
So anyway, we got some good stuff. This has all been recorded. If we can add this to the YouTube, and then later in the week we're actually going to go through the LO hacks. I want to make sure that you guys understand all that, because there's a lot of good stuff in there, and it'll help you to, you know, the more that we reinforce this, the more better you're going to get, and you're going to have in your mind. Anyone else have any final questions or comments, or no? Okay, guys, you have a good evening.